For more, analyst Peter Churchhouse joins us now from our Hong Kong studio. Welcome to the program, Peter. So what does this listing of Dalian Wanda actually signify, and what does it say about the broader market?
Well, Dalian Wanda is a very much a unique company in the China context, and perhaps even the world context. It's one of the few larger companies that concentrates on building investment properties, that is, properties that holds for long-term rental income in the commercial space. It's huge. It has 180 million square feet of completed investment properties, and it's got close to 800 million square feet under development or on land ready to be developed. So it's a huge, huge company. What I think people do worry a little bit about is that it is quite highly leveraged. It has about $28 billion of debt on its portfolio. That I think is something of a concern to some people.
All right, let's take a look at the broader market now, because Dalian Wanda is a property market. We know property hasn't been doing incredibly well in China, but we've seen a huge rally in Chinese stocks in recent weeks, and this doesn't seem to be reflecting economic fundamentals. So why are Chinese investors right now so enthusiastic?
Well, you mentioned the cool down in the property market in China. To some extent, that I think is driving people away from the property sector into the stock market. In China, you have very few avenues for people to invest their money. They can't take their money offshore. There are capital controls that prevent them doing that. There's not a broad-based investment market of mutual funds and so on. So people have only got property or the stock market, and the property market's been a bit quiet in the last 6 or 9 months. So people, I think, have just pulled off into the stock market, and on top of that, they've been using a lot of leverage. They're using a lot of margin trading, which I think the government is trying to rein in a little bit at the present time. So really, it's just another alternative investment, which makes it very, very popular at the moment.
And very briefly, Peter, how do you anticipate regional equity markets to perform next year?
Well, I think in the early part of the year, I think they will be bolstered by the low oil price right now. That has a big impact on, certainly on economies like China and so on, the oil importing countries. But what I do worry about later is the financial crisis that low oil prices could bring upon us later in the year.
Okay, we'll leave it there. Peter Churchhouse there in Hong Kong. Thank you so much for joining us. Now, what do Christmas